Hello friends, very good evening. Myself Bala here. I'm SEBI certified research analyst. I welcome you all to my YouTube channel, Talent Traders. Those who are new to my YouTube channel, kindly make subscribe the channel to get more update on intraday and positional trading strategies. And this video, I'm going to talk about that another multiple candlesticks continuation pattern. That is last video we discussed about the candlesticks where that is three rising method. Here we are going to discuss about three falling method. So that last video we are making for that of bullish continuation pattern. Here we are going to discuss about the bearish continuation pattern. Right? So that is simple. We have already created a code. So the same like that. So what kind of candle we are expecting? So the first candle should be red, and after a few green candles we are expecting in 3 days, and again there should be a red candle which forms and closed below that low or even close. So this is the pattern where we are exactly finding out for the trade. That is what the bearish continuation pattern. The previous trend should be down, and again when this kind of candlesticks where it forms in the middle, so further fall can expected. So that we are going to use a scanner to find out that kind of stock where it is forms exactly. So when you find out that stocks, there is a good opportunity to make an intraday or even a positional trade. So that I'm going to explain. So last video we discussed about DLF on rising three method, right? So 1, 2, 3, 4, and here somewhere rising three method. So up to this candle. So that is giving you such a breakout and moves, and it is happening at lowest level. So there is a reversal possibilities also be there in a market, right? And now we are going to use the following three methods that I have already created that code, and let's run this code and we will find out a lot of stocks, but recently we don't have any stocks. This is happening by 23rd August. So what we are expecting the pattern where exactly forms at the candlesticks that will filter out the scanners and screeners that help us to make our work very easy, right? That is the first important thing, to make a lot of scanners, right? So Maruti will discuss about Maruti. Sorry, here we will open on our trading view. Maruti. Let's see the date, which is around 23rd 8. That kind of candlesticks where it is forms 23rd 8. This one 23rd 8. Yeah, compared to this 1, 2, 3, 4 and 23rd, but it is not a looks good pattern. But even though market broke the low and it moving down, so that is a good one. So Bajaj Auto, we will see clear thing how it is forms the candlestick spread. Bajaj Auto on 23rd, this one I think. So one big green candle, sorry, red candle at this point, and 1, 2 third candle inside, and fourth one is a big down. So we don't offer an opportunity. Previous trend also be down, but we are expecting the continuation, but still it is not giving any opportunity. But this is also not good, looks great. So let's find out previous ones. 20th August, Dr. Reddy. Let's check it out. Dr. Reddy, 20th August. Can you see that? It is looks great. The previous trend should be down. The previous trend was in down, and where you see that 1, 2, 3, 4 and fifth candle. So there is a big red, and next 3 days green, and fourth day should be a red, and broken that level, it moves down and recovered. So here when it is going down and recovered very fast. So whenever this is what our stop loss, the stop loss also got triggered. If you are planning for a candlesticks, so I was taken an entry at this point or at this point. When I'm focusing for a candlesticks where I am going to make the stop loss for my trade at this point entry, this is my stop loss as per this candlesticks pattern. But if I am know about my candlesticks pattern, there is a hammer kind of candle where the breakout at that point, or this one is a inside out of candlesticks. So the telling us there is a reversal again at the bottom. So when I take an entry at this lowest level to continue this trend, but I was stopped out, instead of I'm waiting for my stop, I'll reverse my trade at this point. so I'm going to lose minimum, but my initial stop is big, so I can change my trend. So initial again, so it gives you the big up. I can easily get my profit on that time, right? I will recover my loss, and also I'm ending with the profit. Third one. So let's check about the exact candlesticks pattern where it is forms somewhere three stocks: SBIN, Maruti, Sun TV on 16th August. SBIN 16th August. Big red 1 2 3 inside, and third one, so not good. SBIN, Sun TV. Yeah, can you see this one looks good? Big red candle, after that three small, if it is a green, even powerful, and fourth one is red and closes below the low, and when the market breaks that level, and it has started falling. Previous trend was down, and there is a struggle, and again it is continuous trend. And the third one should be a Maruti. Let's check on 16th August. Again same 1 2 3. So when if you find the exact green candle on that, even it is more powerful, right? So let's go for a previous back test. Tata Power on 27/7, close to 7th month. 7. This one, big red, 1 2 3, and fourth one. So the low should be the stop loss, and again there is a candlesticks pattern which forms to reverse my trend, that is inside out. So when you focus that candlesticks pattern, you will easily find out where there is a market going to be reversed, so that you can easily find out. That is the main important thing where you are planning for a candlesticks pattern. So three falling method. Okay, again I'm going to tell you some interesting thing on this video. So yesterday I have one comment, right? I think Jindal Steel. So this is the Jindal Steel where I am expecting there is a breakout based on the Arami candle. Yesterday I have some comment. I like to answer that comment because that is a good and quality comment. So that is why I'm taking that comment to give you such a feedback or explanation about the comment. Okay, so when the market is going down and it forms a Harami pattern, that is bullish Harami, that was happening in the lowest level, and it given a breakout. Now I was taken the entry. So what is the stop loss for the trade? 357, right? My entry point at this point 385. My stop loss would be 357. If I'm going to take this trade, my risk for the trade is somewhere 28 point is my risk. Instead of taking a future, the first one, if you are taking a future, what is the question on the comment? If next day market opens like a gap down, for example, if I buy this day 410, I'm making a stop loss at 400, right? But next day market from 410, it suddenly fall down to 392. So my stop loss is not getting triggered, right? That is what your question. And after that, even what I am thinking 410 I am taken with the stop loss of 400, but next day market opens 390, my stop loss not get triggered. 100% your stop loss not get triggered. So this time you should pay this much of loss. But initially I was taken the risk for a 10 rupees, but due to the gap down, I'm losing even more money. What I'm planned for the trade, even more money I was losing because of the gap down and gap up issues. That is the right question. So when the gap down, gap up is happening, we don't exactly predict the market what will be happen tomorrow. We expect tomorrow market may open gap up, but when you see that it will open by gap down, so what we do? So this is the point, exactly the question with the client, that is my subscriber is arising the question at this point, how I can. So that is why we told you. So for example, this trade taken a 28 point risk if I do with the future. So what you simply do, I was buying a 20 rupees call option. That is what the premium which is trading 20. I was taking a call option. Now it is in profit. No problem. When the market moves up, I'm going to, if next day market opens 50 point gap down, this I'm going to lose only 20 points from that option premium paid based on this trade signal. If you are buying options, correct? So maybe the better one, buying options may avoid gap down, gap up if you are following the trend based mechanism or trend based method. So you maybe avoid that what we say gap down and gap up if you are buying options, right? Even if you are buying options, so for example, if you are buying a 20 rupees call option, you can sell a 10 rupees call option. Means not a strike price. I'm talking about the premium. So this will give you the maximum risk is 10 rupees and maximum profit may be 10 rupees. So the risk reward protected. Risk also be protected and reward also be protected. If your trend is happening, you are going to be paid, and if the trend is not happening, you are going to be lose what exactly you planned for a trade, like a bull call spread. This is what a bull call spread, right? So kind of strategy you can use it, or a long call, synthetic put, right? Synthetic call. So anyone you can create. So some strategies having less risky. So based on this trade, I am going to take 20 rupees call option instead, right? I'm going to protect myself. I'm going to sell a 10 rupees put option, sorry, call option. So that will be protected strategy. When the trend is right, you are going to make money. If the trend is wrong, you are going to lose some small money, right? If there is no gap up, gap down, there is no play, right? So you're asking the question, what happen if tomorrow is going down? If I do this kind of strategy, what will happen? The main question, if you are doing with the futures, if you buy here, I'm not able to place any stop loss. When the market goes below that level, I'm going to lose money. So why I should, if it is gap down, so why I'm going to buy 360 put option one lot. So I'm buying a future here, buy future, and I'm just buying a one lot of 360 put option. So that will give me such a great profit. If market is open gap down, so what I'm taking a risk, that was my exact risk. I'm not going to lose more than that. Even market goes down 100, 200, 300 points. If market moves up 100, 200, 300 points, see what exactly the trade which I'm going to discuss here. If you are buying at 385 the future, you are bought. I buy the stop losses were somewhere 360. I'm buying a 360 put option somewhere around 3 rupees or 4 rupees. So what I'm doing here, if additionally I'm taking another 3 rupees risk, initial risk is 28 plus 3, now my risk is 31. But this one, so if tomorrow or day after tomorrow market goes down from 360 to even it comes to 200, I'm not going to lose more than that what I risked. But when the market is moving up, I'm going to lose only 3 point at this put option. So remaining profit which I'm going to gain from that future. So these are the methods. So a lot of method, not only this. So we can sell future, buy call or buy put, sell call, like that. Lot of things which you can do. So the only thing, I don't know how to predict the direction. That is what the main important questions. Once you know the direction, you can have lot of strategies. You can Google it. Many strategies available. Okay, so you can apply. So the main problem to find out the direction. And if I find out the direction, so there is a lot of strategy. One strategy having a big risk, one strategy having a small risk, small profit. So there is a kind of risk protected, reward also be protected. A risk limited, unlimited reward. Okay, so which you are going to take it out? So that you can plan. So a lot of strategy is there, right? So this trade you are asking about a comment. So I was now explained about this. So now you understand. So for example, now let's say I'll just Google it. My view bullish, right? Let's try it. Bullish on Jindal. what strategy is best now? Jindal Steel, what strategy is best? If any idea, there is Google not recommending. Like you can say, just for a bullish strategy, my view is bullish. What strategy is best? Not only JSW Steel, Jindal Steel. Just type it and search it. What is the best option strategy? Let's try it out. If my view is bullish, what I can go for do? So you can so for a bull call spread option strategy that we can use it, right? So lot of strategy is there. So when we want to find out the direction, right? So what is the most bullish option strategy? Simply buying a call option. Lot of answer. What is the best strategy? Yeah, you get it now. Bull call spread, barefoot spread, protective long straddle, long angle. So lot of things is there. But the initial thing which we are going to find out the direction. Once we got the clear direction, we can use n number of strategies. There is a lot of strategies. It is based on our risk and reward, so that you are going to do it. I hope this may be useful, and thanks for watching my videos, and thank you for subscribing. And if you are not yet subscribed my YouTube channel, just keep subscribing my channel to get more updates. Thank you for watching this video. Thank you very much.